Aloha, everyone. Joshua Hayes at BigWaveTrading.com. The stock market on Tuesday did pretty much what I expected it to do exactly. So far, so well. The S&P 500 pulled back 0.70% following a rejection of that downtrend line, as you can see, going through those three peaks. Now, the key is to hold the 50, 20 not shown, and the 200-day moving average. As long as we can consolidate into here, coil, reach the apex of the symmetrical triangle, more than likely we can probably break out higher, but nothing's for certain. All I know short term is I want to continue to focus on SPY put options intraday instead of calls. And on that note, today was a very successful day trading the SPY puts. It wasn't perfect, but it went pretty well. Once again, want to show everybody the potential. Quote, blind buying of the puts in the morning. Took profits with right around a 33% gain, but by the time the entire move came to fruition, you could have had and produced over a 50% return within the first half hour of the trading session. Once again, why I like puts. And then what I did is I held mine all the way till when I woke up on Maui in the morning at 8 a.m., 2 p.m. Hawaii Standard Time before I went out for a surf session, realizing a 50% gain on the remaining put options for an overall gain of right around 40% on the day. And if you remember, I lost 8% yesterday, and the session before I lost 10%. So in just one day, the 40% overall return makes up for the 2 days of losses. So I have a 33% win rate in the last 3 days, yet overall a 25% gain on the option trade. So once again, the power of these put options when they move. And hence, even if you, if you get it to the high, like I said, today, you could have realized if you got it at the lows of the day, intraday to the highs, you could have realized a 70% move. And that's not bad for a market that didn't even move 1% on the day. So for Wednesday, same thing. I'm still focused on those SPY put options because we're at that downtrend line. You can see the Russell 2000, which was extremely impressive today. I had very few stops trigger intraday outside of the first 1 hour and a half of trading. There were about 10 stops that triggered intraday in the first hour and a half, and after that only 4 triggered the rest of the day, and that's because the Russell 2000 did very well. The Russell 2000 is showing some short-term relative strength. It's unfortunate that there's no volume behind the move, so we have to be cautious here, and I'm still inclined to think that we have more work to do on the downside as we go through May. Remember, this is one of the seasonally weakest months of the year. June is better, so I would love to see us pull back for the rest of the month, then resume the uptrend higher. But whatever the market decides to do, I'll work with. I don't care what it does. And then just really quick, the Dow Jones Industrial Average, you can see multiple overhead resistance lines. This index is lagging badly. And then the NASDAQ above that recent resistance line that now should be acting as support. We'll see. Even if it goes below it, we still have that 50 and 200-day moving average. But a lot of the indexes, they're at those downtrend lines, those resistance levels. The volume was weak on the bounce. So if we weaken, it wouldn't surprise me. But when you look at the New York Stock Exchange advanced decline line hitting new highs, because I think right here on this session on either Friday or Thursday, the NYSE advanced decline line hit new highs. And as you can see, the market is nowhere near new highs. That is very positive relative strength, very positive divergence. And that's because of the Russell 2000. And with it being near new highs, if the Russell 2000 breaks out, I can only assume the other indexes will play catch up. End of day sell signals. There were not many. GTXI, 50% sell signal closing below the 50-day moving average. Had it closed below this low a day right here, which it did not, it would have been a 100% full sell signal. As it is, half of my remaining shares will go here. The final half will go right there. VRTU crashed through 3 stops, protecting my capital. Now what I have remaining, 50% goes here. I have 25% right there, and currently the final 25% below the 200-day moving average. If VRTU closes below this level here, before closing below that level, and that level, I'll be moving all of my stops higher. But definitely 50% goes to today's low of day. And then FIVN got knocked out of another 50% intraday today, and you can move half of your stops here. I still have 3 stops remaining on the position. If it loses its green bop, it'll be raised and consolidated. If it closes below the 50-day moving average on above average volume, they will be raised and consolidated. Already out of well over half of my FIVM, over about 66%, the 33% of the shares I still have out there. I have 1 stop here, 1 stop here, and a final stop here. But once again, heavier volume, losing the green bop, these will not come into play, but for now they're in play. And then BBX is the only 100% full sell signal. I do not have a position no longer in this stock, as when it moved below these lows right here. Intraday yesterday, I was knocked completely out. But if I was still long BBX, 100% of your stops go to 1 cent below the low a day, 872. So if it hits 871, you need to be completely out. And even then, from our initial entry back here, we still have gains of 9%. So not too bad, but it's completely rolling over, closing below this support level, this key support level, below the 50-day moving average. And even though it's not quite proper, if you want to really be silly with your chart patterns, but it is actually kind of true. This is a shoulder here. That's a shoulder. That's a head. And technically this itty bitty few days is another shoulder. So you got the left shoulder, the head, and the right shoulder. Head and shoulders top on BBX, 100% sell signal. And for new long positions, there's only 2 new long positions and 1 add signal. The first new long position I want to go over is HIFR. HIFR is Cancelim quality. It was confirmed in my price volume BOP surge scan. Huge volume surge. Love that BOP went to a strong green level again. I'm really not quite sure because I'm making this video before looking at the stops, but no matter what, I know that I want to get long. HIFR at the high of the day, 2104. You could use a first stop level here, a second stop level here, a third one here, and a fourth here if you like. I'm thinking that's what I'll probably do, but more than likely I'm not going to have one that tight there. So I believe I will have a third here, 1/3 right here, and a final third here, and the same principle goes. These levels crack right here before these 2 levels come into play. I'll be raising my stops. I do not like losing money, do not plan on losing money. In the month of May, protection is first. But if you're a new trader, you might want to do 1 here, 1 here. And maybe that's the only 2 you use. And that's what I recommend as a new trader wants to protect capital. I want everything to line up. I want the market to rally on heavier volume, have a follow through day, and have positive seasonality. None of that's happening. So every long position is suspect to a nasty trend reversal. Keep that in mind. But HIFR, for being Cancelim, perfect speculator, 1.5% of my account capital, $7,500 into HIFR. And then the other new long position is from my perfect speculator scan. Been watching this stock since back in October and November. Been watching this stock, through here as it made a base. Was watching it here because it's been in my perfect speculator scan ever since, like I said, I've been watching it since, I don't think it was here in October, but following this move, I mean, DS is just, every time it's higher, I see it in the perfect speculator scan, and it's been quite a while it's been in that scan. So we finally have a bullish hammer candle over candle pattern on not heavier volume, but above average volume with a slight BOP confirmation. If BOP would have gone the other way, it would not be a new long. If the stock was extended from the 20-day moving average, it probably would not be a new long, but it's not extended. BOP is going the right way, so I'll go long Drive Shack. Perfect speculator scan quality stock, as I mentioned. 1% of my account capital, $5,000. Limit order $5.43, the high of the day since it's not extended. And for now, I'm not quite sure. But no matter what, if you're taking this long position, I want you guys to use this level as your final stop level. You could put 1 here, 1 here, and then you could even split it up further. Put 1 more here, maybe 1 more here, and that's what I might do. I'm not sure. Maybe I'll do 1 here, one here. That way, if it fails here, I'll be out of half really quick. And then I'll give it a room for it with another quarter to right here and the final quarter right here. But once again, if this level goes on my end, these levels will never come into play on DS. But 543 and those levels, I'll write those or type those out on the new positions page. And then the last signal, an add signal in LOPE. This is also a buyback signal for me. I was completely shaken out of LOPE back here. Still tracking it on an end of day basis as it did not trigger a full sell signal following that reversal. It's bouncing off the 50-day moving average. It's had quiet volume following that powerful move back above the 50 on strong volume pocket pivot point signal with the strong green bot move. It has consolidated basically sideways on below average volume. I got the heavier volume bounce off the 50-day moving average with green bot moving up. That's good enough for me with some very tight stop levels on low. Since it's a buyback for me, I'm really keeping some wide stops on the final stops. But if you get long lope at 108.01, the high of the day, like I am, you can use this level here and then this level here, maybe this level here. So maybe you have 3 stops, maybe 4, 1, 2, 3, 4. I know for me, what I'm going to do is one here for sure, one here, and then a final one right here. One final deep stop back here, since I should still technically be long if I was holding it on an end of day basis. But no matter what, also thinking now here. So let's just say that that's what's going to probably more than likely happen. I'll probably have 1 quarter here, a quarter here, and a quarter here. So tight stops on the first 75%. And then one final loose 25% stop back here. But I got to look at other charts. The stop levels aren't quite very, very clear on all 3 of the new long positions. But I do know the key important levels. You want to make sure it doesn't go below. It goes below here on an end of day basis. All out. DS here. All out. And LOPE right here. All out. Basically the April May lows. All right, everyone. I'll see you in the chat room on Wednesday. Aloha.